Welcome to the monthly market update. This is July 2026, and we're a little bit late this month just because we were doing some traveling and Cheryl is still out of the area. So I'm going to be on my own today. Let's get right to it. So, it's interesting. The news is always meant to terrify, not clarify. And as you can see from this slide, sellers are pulling homes off the market at the fastest pace since 2020. Crazy. Map reveals where American sellers are pulling their homes off the market, and on and on and on. Is that true? Well, there is some truth to it. Redfin posted this. Nationwide, 5.8% of U.S. home sales were taken off the market in April. This is April data it's looking back to. That's tied with December 2025 for the highest share since March 2020, when the onset of the pandemic ground the housing market to a halt and spooked sellers. I was there. It did. Prior to 2020, delistings were never as common as they are now. So, what does that mean? Some sellers are choosing to wait. For example, if you look at Atlanta, which is the highest in this chart, it's over 10% were delisted in metro area in Atlanta, with Pittsburgh being down at the bottom. We see that in our market as well. I don't have those stats, but I know in our own listings, we're seeing folks where they want to take a break. They don't want to give their home away, and they're willing to just sit and wait. So, we're seeing this now nationwide, as you can see from these charts. So the question is why? Well, there are three forces shaping today's real estate market. One is recent inventory growth in a lot of areas. Good for us. Remember, we always go up or come down first. So our inventory is reducing in our area here in Southwest Florida. Shifting prices across the nation and longer days on market. And we'll see some of those later with our own stats. We're going to point you to a social media post that we're going to do so you can have all that. So if you're watching this on YouTube, there'll be a link. Go and check it out on either Facebook or Instagram. So inventory's been rising, as you can see, for this in the last straight 4 years, which is crazy since 2022. It's just been, there's some seasonality to it, but just steadily going up. That's from Housing Wire data. You can see in 2020 where this line is that marks it, that's where it started to go down significantly, and then you'll see the rise here in 2022. Redfin's going on and saying in many parts of the country, listings have piled up as more homeowners try to sell as buyer activity slows. That increased competition among sellers means some homes sit unsold, prompting owners to pull them off the market rather than cut their price. We saw that. We've been in that market. That has changed actually and is changing for us. Now, I don't know if you're a seller out there, but as you'll see from realtor.com, 80% of sellers think they're going to get their asking price or more. Now, we're about, 93, 94% of sale to list price in our area. But this particular stat says that 37% says they're going to get more than their asking price, and 46.4% says they're going to get right at their asking price, which is pretty high. Especially when you're negotiating in a market that's shifting. More homes are selling for less than the list price. And you'll see this from 21. This chart from Redfin and Resi Club goes all the way up from 38% in 21 that sold for less. So we were in a really hot market in 21, all the way up to 62% in 25. So we're seeing that happen where they are selling for less, something to take note of. So the University of Utah, their senior research fellow, came out and said they, meaning sellers, have the expectation on price. If it's not being met, they'll just stay put. The move is not worth the cost. Now, that's interesting because we've seen that now in the rest of the U.S. We've always had that here because we're a second home market and, people are going to get what they're going to get. They're not as necessarily motivated as they are if you're moving for a job, right? This is your second home in some cases. In this chart from realtor.com, homes are taking longer to sell. You can see in 21, they were 35 days. In 22, it was 30. So 22 was the bottom of it. Things were hopping across the nation. And now it's taking 52 days nationwide. But as you will see in this next chart, this map of the U.S., all of Florida is around 75 days. Again, you're going to have to tune into our Instagram and Facebook to see what our numbers are in Southwest Florida, because I take them back year over year for the last 3 years, so you can see what those are. So what's coming in the housing market for the second half of 2026? Well, I love the fact that the 5 analysts that they have on this particular slide is the National Association of Realtors says that the prices will go up by 4%, and Mortgage Bankers of America are saying that it's going to increase by 0.6. So average, that's a 2.3% increase. That's fantastic. NAR, their economist Lawrence Yun added that housing wealth accumulation will continue in 2026, with a typical homeowner gaining approximately $16,000 in wealth this year. Now, nationwide, that number, housing price is much less. In our area, the average is a little higher, so you're going to see a higher gain. He also went on to say home sales are expected to be modestly better in the second half of 2026. Nationwide, I thought we had a pretty good first half if we look back at the Bartos Group and what's happened in Southwest Florida. But, nationwide, they're expecting better, so that just means we're going to be even better. As a matter of fact, when you see from this particular slide, in 24, home sales were 4.7 million plus. In 25, they were just a little bit bigger, 10,000 more. And they're predicting in 26 to have 4.878 million. Now, that's just a little bit more than the other two, but it is more. There are more homes that will be sold in 2026. In addition, more buyers are saying yes. That is great news for the rest of 2026. When you start to look at this chart and you see that kind of tipped off in the 2 recent years of 24 and 25, and where we are sitting through June in this particular graph shows that we're going to have a trajectory of more. Odetta Cushy, from Deputy Chief Economist from First American, she's saying overall, we expect pent-up demand to continue emerging gradually, but the pace of recovery will vary significantly across markets. Totally, we're going to see different than, Detroit area, and will depend on the path of rates, labor market conditions, and inventory growth. So that's it from a national perspective. We're going to give you the local stats, and we're hoping that you'll tune in to our Facebook and Instagram page, and she might even put it up here on YouTube. So we'll put a link here if you're watching it from YouTube to make sure you can get that. Until next time, I'm Mary Bartos with the Bartos Group of Premiere Plus Realty, and we look forward to seeing you here in Paradise, whether you're buying or selling.